as the Forex market. Okay.
Yes.
As usual. So here we are in, what is this? GBP, JPY, weekly time frame. Okay. And what we can see here, is we can clearly see we were moving down. This was a downtrend.
Yes.
But yeah, it was a very good downtrend there. And then we had this movement, which was an upside movement. The market was trying to move to the upside. Is it?
Yes.
And the market was trying to move to the upside, and we can see the market from here. You can see change of character. Is it? This is where we can see change of character here. Is it?
Yeah.
Yeah, this was change of character. And again, we can see the market continue to break structures to the upside. You can clearly see break of market structures and creation of higher highs and higher lows. So our higher high, like there, a higher low, higher high. No, this is not it. High, higher low, higher high. This is higher low here. This one, higher high. Okay.
Okay.
You can see. So we had the higher highs, higher lows, higher highs, higher low, higher high. Now we expected to see higher low and then higher high. Is it because we are in an uptrend? Is it? But what the market did here, the market did not respect this higher low. And the market broke structure to the downside, and this becomes a change of character. This one.
Yes.
So this is change of character now. And what we can see from here is that we see this very strong momentum to the downside, which blocks structure, which is a change of character, is it?
Yeah.
And we can see some imbalances. You can see like here. As an imbalance, okay? The fair value gap here.
Yes.
Now, where is our order book? We choose our order book, okay? And
the green color window.
is it?
Yeah.
That's our order book, our weekly order book, okay?
Yes.
Yeah, so let me use these words. So this is our weekly order block. So we have a retracement. What we do, we go to lower time frame. We go to 1 day time frame, okay? So if you go to 1 day, like that, that's our weekly time frame, okay?
Yeah.
Yeah, that's our weekly time frame. So now what you can actually see here is that the market, yeah, the market was moving down again, moved to the upside, and we can see we are inside the weekly order block. And inside the weekly order block, we can clearly see some movements here, and we can actually see different, like 2 order blocks. Is it? Like we have this one.
Yes.
We have that one, and we have this one. And what you can see, the market went above this order block, is it? And this like this is the
shooting star.
Yeah, so this is like, for us, we call it like, this candle was just like trying to take out liquidity here, okay? That's why you see a very long wick to the upside, and then the market coming down, okay? So now what are we expecting to see? We just have to know what can we do here now. We see like this is like a retracement now, but it has moved above our order block. And if we try to draw the Fibonacci retracement tool, okay, to know our valid order book.
Yeah. Mm-hmm.
Draw it down. Okay, you can
Yep.
actually see like the right order block is this one. This is our right order block. This one. Okay.
Mm-hmm.
This is our right order block because it is found inside this this points. And we can clearly see like the market went to this level. So what we can do here, as we know that this is the right order block according to our Fibonacci retracement tool, and it is above the it is what we call, it is in the premium zone above 0.5%. Okay, 50%. So now this is the one, but you can see this. So this is what we can actually say now. This is actually was a liquidity. So let's say this is now our area here. Okay. So what we do here, we just wait to see what we call a bearish candle. Okay. Yeah, to see a bearish candle now, okay, so that we can prove that we are expecting to see a movement to the downside. Okay. Oh, very fast. Here we can see here that one. Okay. So this now indicates now we are going down now. So after you see that, what you do, just go to, we go to 4 hour. This was 1 day. So we go to 4 hour. Okay. This is 4 hour time frame. In 4 hour time frame, we can clearly see like the market was moving up, getting high highs and high lows, high highs, higher low. Here, the market failed to create higher high. Okay. So this also indicates that now we can see like buyers are losing the momentum. Okay. So what we do here, what we can actually do from here is that what I can actually see, here, try to analyze this area here. Moving to the downside, failure to go higher, down, up, down. Okay, this is the lowest point. Okay, this is our lowest point now. So what we do, we just wait to see what we call change of character. Okay. There we are. There is our change of character. So this is change of character, is it?
Yes.
And we have this order block here. We have that order block. Okay. We have that order block. And let's see what happens. The market is continuously going down. Okay. The market has not mitigated our order block and is continuously going down. And what we can actually see here is what we call fair value gap. The market was filled with the fair value gap, the imbalance, and there was an imbalance here. So an imbalance was filled, and then the market continued going down. So we our order block failed to be mitigated. Okay. This is what happened. Okay. So now we can say, what can we do now? Let's try to continue analyzing if we can actually see another opportunity. So there was another break of structure here because the market went down, up, down again. Okay. So we have this. Okay, we have this order block. Actually, say we have this one. Because you can clearly see like there was a break of structure also here. Yeah, down. But if we try to use to locate premium and discount, the only order block which is valid is this one. Okay. So this one is not in the premium zone, so it is not the right place to sell. although it may be respected, but you have to follow the rules. Yeah. So let us see if it is being mitigated. So if we miss this opportunity, then that's how the market is. There we are, right?
Okay. Yep.
Mitigation there. So let us enter here and see what happens. But remember also we have that unmitigated order block there. See this one, this. We have this order block, okay?
Yep.
Which was not mitigated. So what can happen here? We can actually, a retracement may happen here and we can actually see market going down, or this one might become a liquidity. This may become as an area where we are just being trapped here. The market is trying to test and like we are going to sell here, but maybe the actual price is this one. Okay. So let us see what happens here. But this order block also fulfills fulfills the rule, the conditions for an order block. And if I try to use the premium and discount, yeah, although it is near the equilibrium here, it is very near, and that gives some worries because it is very close to the equilibrium zone. But we have to take it. Okay, it is a nice setup, so we have to take it. If it fails, maybe this was a liquidity, because you cannot identify liquidity all the time. There we are. Okay. That's how the market reacted. So our TP was hit. Yeah. Take profit. Take profit hit. Yeah. Ooh. So that was it. Okay. So it is always like that when you are trying to analyze. It's always the same methods every day, every time. Okay. Yeah. I don't know if you have, maybe if you have a question. You have any question?
Actually, no.
You don't have any question?
Because you analyze it very clearly for me.
Okay. If it's clear
I
that
got a lot of questions before to you. Now I understand because I combine the steps.
sure, you are understanding.
Yeah.
Really, you are
From weekly, yeah. And
that's
from daily, and then for us to narrow down to find out the order block.
okay. That's great if you are understanding. I hope you are understanding, because I just want I have to make sure you are understanding. I have to make sure this is what we call is profitable to you. Yeah. So that was GBP JPY. Maybe which pair can we actually go and analyze? Another pair which you think maybe we should analyze? Do you have any pair on your mind you want to? Maybe let's try to analyze this pair.
Normally I trade the Euro USD. Yeah.
That's why I changed the Euro USD, because I thought we have analyzed it. So I said after Euro USD it was GBP USD. Did you analyze GBP USD?
Not today. Yeah, but we can analyze.
Yeah, but if you are trading only Euro USD, no problem. You can just go there and analyze it. Find another area and we analyze. Okay.
Okay.
You only trade Euro USD, is it?
Yep.
Yeah, that's great. If you concentrate on one pair, although you may not be finding entries or every time or every day, but you will master the chart. You will know how GBP USD moves. Okay.
Yeah, because if I trade too many pairs, I will feel confused.
Yeah, they're confused because
I will forget my friend. Yeah.
yeah, every pair has its own behavior. Every pair has its own behavior. So it is not easy to say you can actually understand every pair. Yeah, so you have to stick with one pair and then try to know the behavior of that.
Yeah.
Try to know the behavior of that, and then after you know the behaviors, everything will be okay. You just be trading, and I usually see this pattern. I usually see this pattern when I'm trying to analyze. Yeah, when I try to analyze Euro USD. At this time frame, when I see this setup, I usually know this is a nice price, or this is not a right price to enter. There is always a liquidity somewhere here. You see, some things like that. When you're trading only one pair, it becomes very simple for you.
Yeah.
Very simple for
Yes.
you to understand. So yeah, I don't know where should I cut from, because if you cut from somewhere we don't see a nice momentum, it's not a good place. Try somewhere with good structure. Where now? I know somewhere here I know we analyzed somewhere during the first day. I think we analyzed somewhere. So now I think, where should I analyze now? Where should I? Okay, let's analyze for me. Let's analyze here and see what we can actually call setup. Okay, so let's think we are actually here now. Let's say we are here. Okay. So what we can actually see here, like the market here, the market like was consolidated. I don't know if you can understand this. There's a like consolidation here. Okay.
Yes.
See a lot of weeks, like the market is playing somewhere here, and that's why you can clearly see like the market, what the market did here. The market went above that level, like it was taking liquidity. Okay, there. It was a retracement, but because there is some sort of like consolidation and liquidity, the market had to go above this area here, because this area is the one with some consolidations. Only this area.
Yeah. Yes.
But if you look behind here, you see some good momentums. These two candles here behind, before this area consolidated, we had nice movements here. Okay. So we actually expect that even if the market takes this liquidity, that's why this area was not violated here. Like we had this order block here, is it? Because the market moved up and then down. This is like a break of I don't know if you can see it clear. This is like the market went up, again down, again up, with that's little consolidations like that maybe. And then the market went down, then came up a little bit somewhere there, and continue going down. Like we had some sort of a structure like this.
Yeah.
Try to take it from there, like went down, up, down, like consolidations here, then break of structure, and then something like this in a retracement. So you expect it. Yeah. So this is a real, we can say this is a structure from what I can see there. This one. So let me remove this. So this one is like the real structure, which has been. So we can clearly see like we had break of structure here, and then we had like consolidation here, the liquidity somewhere here. Okay. And then the market was trying to trap people here, like it was a trap, like a liquidity trap here, this area. Okay. because this like the candle, like what can I say, like the market after breaking structure to the downside here, the market went up here trying to find a retracement. But remember, this is like an area of consolidation, so this is a liquidity area. Okay.
Okay.
So they made this like a trap, like the market, once the market touched their way, maybe someone may expect to sell, but this liquidity has to be taken. That's why the market went above, and clearly, according to the structures, like we had an order block, which also filled this area of consolidation. Like the order block was like something like that. Okay.
Yeah.
So you can actually see liquidity inside that order block, because this was liquidity. So you can actually see liquidity being taken inside the order block, and that's why you can say this is a nice area. If we can actually see liquidity inside our order block, you can actually say this is the right place for us to sell, because already we've seen liquidity has already occurred. So it is now safe for us to trade. Okay.
Okay.
This is what we can actually see from this structure there. That's how we can actually try to zoom it and try to see how it is. Okay, so like this was on the order block. Now what we can actually do here, we just go to lower time frame. Okay. Go to 1 time frame. There we have where we have our structure. There we have our structure, and when we try to refine it, order block is that one. See that order block? I'm drawing up to this level. You see this week, I'm drawing up to this week because the market may go above this level. Okay. We always have to consider these weeks. When we are putting our stop loss, we have to put them above some sorts of weeks. Not only weeks of the order block, even the weeks of another candle. Like here, this was a bearish candle. It was not this order block, which is a bullish candle. But we have to consider this. Okay. Yeah, we have to consider this because the market may go above this level. Yeah. So when maybe you are entering in 1 day time frame, you have to put your stop loss. Maybe let's say
about a week.
Yeah, someone is saying that you have to put your stop loss here above that, okay, for more safety.
Yeah.
So that's the important thing. That's the important thing to do. And that's the important thing. That's why I usually say when you draw this, to see a week, you can draw it if it is somehow not small, but sometimes it may see a very long week. So you don't have to draw the whole of it like your order block becomes big like this. No, just have to draw your order block. But when you are entering, you have to consider this week that I'm not my stop loss like this week. So now when we define our order block, our weekly order block in a daily time frame, we see the order block is this one, is it? So now what you can actually see, we see the market is now showing a momentum to go down, is it? So what we do here, let's see first if you can clearly see this liquidity here. We said this was some sort of liquidity. Yeah, that was the liquidity there. So now we go to 4 hour time frame. Okay. 4 hour. There we have 4 hour time frame. And actually here we can see what we call, you can see change of character.
Yes.
Like we can say maybe this movement to the upside, again movement to the downside, movement to the upside, to the downside. Like change of character is here. Can you actually see change of character here? Okay.
Yes.
Let's try it. Try to see if you can see what happens there. Oh, what is happening? Okay. So here was a change of character. Actually it is not that much clear, but this is change of character here. Okay. That one, the change of character there. And what happens here is liquidity against occur here. See this? Liquidity was taken here. Because of this, also here we can see like the market had that strong momentum, is it? Try to like consolidate. The real consolidation, you can even see it here. Like the market did not that much move. So the occurring of this liquidity is just part of it. But remember what I said, that even if we see liquidity, we just have to consider where we put our stop loss. Okay.
Yeah.
Now what you can see here is a retracement, but a retracement with liquidity. Okay. And as you know, I usually say I don't trade what? I don't trade the pending orders. You know, pending orders. Like you sell before the area has been touched.
Yeah.
That's to me is not. I have tried that and it was not favorable to me, so I don't usually use that. So there you can actually see liquidity occurring there. Okay. So in 4 hours, this is, you can say this is the best place for us to enter. Okay.
Yeah.
Someone may enter here now. This is already, we can see liquidity and the market has closed down here. So if you see like this is liquidity and the market has closed very down here. This is you can enter here. Just after you see this candle has been created. Because we had a retracement. You see, we had a retracement, bearish retracement. So someone, maybe we enter that somewhere there. Okay. If you are going to enter there, you are going to be taken out. I'm really sure that's not a good entry, right? Because this liquidity was very, very, very strong. Okay. So now immediately after you see that the liquidity we have closed now, we have closed here this candle. I was just going to take my trade somewhere there. Okay. And this is very risky. You know, this is very, 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 because let me try if risk to reward ratio is good. No. Yeah, risk to reward ratio is not good. Okay. You also have to make sure your stop loss is out of this. That's very, very difficult. Now you have a very poor risk to reward ratio. Okay.
Yeah.
So it's better not to trade. You're not too forced to enter here. It may actually be a nice area that you see retracement and you see liquidity has occurred, but the problem is the length of this liquidity candle. Liquidity wick is very long now. If you are going to enter, you're going to have to a lot of what we call pips.
Yes.
No, you see the whole area, that one is just for what we call, we're just going to put the whole area for stop loss. Now you have what? 2 risk to reward ratio. 2. But this is very dangerous area. So what you can actually say, maybe this is very dangerous now. You don't have to trade something like this. See, it is very bad now. So
yeah,
just maybe wait for market structure shift. If you see, like, let's see if we have, we see levels. Yeah. Although we can see our TP was hit, but the problem was what? The risk to reward ratio was very bad. Okay. So actually, that one we just let it go because it was a danger. Yeah, we cannot just enter every opportunity. We have to look at how it is. Now we have another. You see, this area was an area where we clearly created some liquidities here.
Yeah.
This area, like consolidations. Liquidities were created and were taken also. This area was not that much favorable, is it? Like consolidation was right here. So now we have this break of structure to the downside, which also broke this lower level here. So now what we can do now, let's wait again and see what how the market reacts. This order book. Okay.
Yes.
So let's see if it comes back or if it doesn't come. That's the behavior of the market. It is continuously going down now. Yeah, it is going down. But what we can actually see after it has this long downtrend, okay? You can clearly see some market structures being, see like the market went down, up. We try to went down, up. Let's say up there, down here, little bit up, down, up, down. Now it's somewhere there. Okay. This is like the market was creating some downtrends, is it? Like it was moving down. So now this one cannot be break of structure. This level here, we just consider this as a break of structure. Okay.
Okay.
This is found here. That structure is right here. So now we have seen this movement to the downside, and then what we can see here is a retracement here. Is it? A retracement, and the market continue going down. So we cannot just expect that the market will have to come back to this order block. It is now a very long distance. We cannot, in 4 hours, we cannot expect to see a market coming down to the highest level at this point. We just have to try to look at opportunities as the market creates structures here, is it? Like somewhere here. Somewhere here, we can actually see this break of structure here. Break of structure, we cannot consider this as a retracement because it is just inside this. Another break movement to the downside, upside there, movement to the downside. Just consider this whole area as one movement. This area here, okay? As one movement. You cannot say this is a movement like this. You cannot consider it like that. Okay.
Okay.
Yeah, because it is very, very, very weak. Very weak. It's not that strong. So this is, now we are going to, we can just consider this as a break of structure here. Like the market broke structure to the downside. Now where is our order block? We can clearly see, like, we can consider this. Did I tell you about, we have to look, we have to use a very nice body. But sometimes we use an indecision candle. Did I tell you, or I told someone else? And we can combine these two, okay?
Oh, okay.
Can combine these two as order block because you have to see something valid, or you can just use this indecision candle, okay? But not the candle like the bearish, I don't know, the hammer, I don't know, the morning star, I don't remember them well, but the only candle that you can actually try to use it as our order block is this indecision candle. You see, like the body closed at the middle, okay? So it is a balance. Now we don't know, here it is equilibrium. Buyers are here, sellers are here. So this can be a nice area for decision because there is equality between buyers and sellers. So the market is coming back to touch here and say, now after touching this, I'm making the decision that now we sellers are in control now. Okay. So this was an indecision area. There was no clear decision. But after we see that retracement, you see that retracement.
Yes.
That becomes a nice area. And this is here. This is liquidity because you have some like eco highs somewhere here. You see them?
Yes.
That's why I said this is not a break of structure here.
Okay.
And you can actually see the eco highs. Those eco highs, do you see them? Yeah. So this was liquidity, and the liquidity was created so that the market takes out this liquidity and touch our order block. So you can use this, you can use this, but all of them will be nice. All of them will be mitigated. Okay.
Yeah.
So this was mitigated there. So now we can actually say after mitigation, we see a movement to the downside. If we are going to enter, that was a nice entry, and we're going there. Okay.
Yes. Yeah.
So we're going to focus like that. And then after that, we can actually see, like after retracement, the market created this order block again. Is it after break of structure? So the market is continuously breaking structures.
Yes.
Yeah, so That's it. Tracement. Where we focus now, because so yeah, I didn't know even where to focus. I didn't know where to focus here. I just wanted to see how the market reacts. You can actually see if we are going to focus maybe here, our TP was going to be hit if our lower level was this. Okay.
Yeah. Yes.
So the market after coming here then started going up.
Change of the character.
So this happens. Sometimes you may enter a trade and before you are what you call your TP hit, you are taken out like here. Okay.
Okay.
An example, this was the one. I just put my TP here. I didn't know where exactly to put it because I was just trying to see the market structure, how the market moves.
Yeah.
Yeah, so this is what happens. So now we can actually see a change of character.
Yes.
The change of character here.
Yeah.
And actually, yeah, we don't see clear order block because so many some different order blocks and no clear imbalances. Is it? Yeah, this structure is not that nice. You don't see any opportunity, any nice opportunity because order block here, order block here, order block here, order block, very close order blocks. So this is not a good area where we can actually say you are going to trade. So there, I think this is continuously going to go down because of this. Okay. It's like the market came back to moving
yes.
down. So we are actually in the same, maybe we are actually in the same what, in the same setup that we are still in the downtrend. So you can choose maybe
the block there. Yes.
Let's see. There we are triggered, right?
Cool.
Cool. So see a triggered and the same and the clear movement to the downside. That's it, is it?